there's been success already, right? Like billions of dollars have already moved via stablecoin. So like there's clearly something there. To me, it's actually about agents shopping with people rather than for people.
Yeah.
You can optimize and automate parts of money, but there are a lot of financial transactions where there's always going to be a person involved. Calling yourself AI is like the last generation in companies calling themselves like SaaS.
JC, welcome to Venture Grounds. Good to have you on.
Thanks for having me.
Why don't you give us a background on yourself and tell us a little bit more about Better Tomorrow Ventures?
Yeah, for sure. So Better Tomorrow Ventures, we're a FinTech focused fund. We lead rounds at the pre-seed and seed stage. Our check size generally ranges from 500K to 4 million. And the thing to know about us is that everyone on our investing team has either started a FinTech company or has spent time working in FinTech. So our two GPs and co-founders, one of them was one of the co-founders of NerdWallet. Another one started and sold two businesses. One was a payments company. One was an auction software company. We have another investor on our team who started a consumer fintech in India that was acquired by another venture-backed company in India. And then I joined the team almost 4 years ago now. And I started my career at this boutique consulting firm that focused on like risk and compliance for banks and for financial institutions. So I started off working with banks a lot, and then we ended up launching this fintech practice that was focused on like helping fintech companies apply for bank charters. So we worked with Vero, we worked
Hot
with
space.
we worked with Vero, we worked with SoFi, and we told a lot of people not to get bank charters. We were like, unless you want to spend multiple years and multiple millions
$10 million
doing this,
plus.
Yeah, exactly. Don't do it. So I worked there for 3.5 years. Company got acquired by IBM. I had no interest in working at IBM. I went to work at Affirm, the buy now, pay later company. I always have to do that now because everyone's like, what firm? And I'm like, no, come on, like Affirm, like the publicly listed fintech company. Yeah.
And I just heard that 99% of people's Black Friday purchases were all on like buy now, pay later, which is kind of scary.
Yeah. Everyone was saying that like it's a great sign for the health of the economy. Like the spend was the highest it's ever been, but also the amount financed was the highest it's ever been. Who knows? So I spent a couple years there, mostly in the later stage growth, but I was there when we went public. I was there while we acquired like 5 different companies. We launched into 2 new geographies. Team went from 650 to 2,200. So it was an amazing time to be there. And I had gotten to know Jake and Sheil over a couple of years, and they raised a second fund in early 2022, and I decided to come on board.
Love it. That's awesome. Thank you. So kicking right into it, you're spending most of your time on AI applied to back office workflows and financial services. What does a startup actually need in place to sell into these customers effectively? What learnings can be derived from players you've observed or invested in?
Yeah. So it's funny, like, I don't think anything's actually changed. Like, I think if you're a startup company, then what you need to be able to do is identify a problem and show the customer that you can solve that problem and drive value for them. And I think like the mistake that a lot of companies were making, and this is especially true kind of like 12 to 18 months ago, was all of these big financial services companies had like earmarked AI budgets. So there's a lot of like curiosity. There was a lot of like willingness to try out new tools. And so I think everyone was like talking so much about how they were AI this and AI that, and every company's name was like insert noun AI or insert verb AI. And I think that was a mistake. Like, I think now what people are realizing is that no one cares if it's AI or not. What they care about is, did you solve my problem and did you drive value for me? And so I think the companies in our portfolio that are like doing really well, they're not focusing on like playing from a loudspeaker, like how much AI they're using or like how they're doing it. I think like AI is enabling technology. It's not the product in and of itself. Like, you should be talking about what the product does, how it solves the problem. And if people want to talk about like how you're solving it, then for sure you tell them about how applying AI to this problem has been a step change in terms of your ability to do it, in terms of the outcomes that you can drive, all that sort of stuff. But I think nothing's changed. It's still like, hey, we're going to solve this problem for you. Here's the value that we're going to drive for you. And here are the outcomes that you expect if you use our tool. And here's why it's a no-brainer that you should use it. And again, if they say like, well, how are you doing it? Then you get into AI. But like, otherwise, I don't think there's any need to be talking about it, to be totally honest.
I can't wait to tell people to stop talking about it. Or it's just like, it's expected, right?
Yeah.
I'm sure even legacy institutions for fintechs that are trying to sell into those probably have a tough time if they're leading right out of the gate with that, because to those sophisticated buyers, they're like, what does that mean?
Yeah, right.
Like, what does that mean for me? How long is it going to take? It's sensitive about data. Obviously, it's fintech, so it's a different game.
Yeah, I think like if you're pitching investors, you should be talking about AI because that's what's going to get them going. But I think when you're pitching your customers, it's got to be like centered around the problem that you're solving, the value that you're driving. I posted something the other day. I was like, everyone just drop AI from your company names at the same time. Like no one will notice. We won't even talk about it. But like calling yourself AI is like the last generation companies calling themselves like SaaS. It's like, yeah, of course. That's how you're doing it.
Got to find another domain for people.
Yeah.
We were talking before this about how you're a bit skeptical about startup opportunities when it comes to agentic commerce and stablecoins. Even though they're exciting themes for a lot of people, why do you think the hype is misplaced, and who actually benefits from these advancements?
Yeah. So I'll break that into agentic commerce and stablecoins. And I think like to be clear, I don't think there's not opportunity, but when I'm thinking about it as a pre-seed and seed investor, I think one of the perspectives that I should have is where does the value actually accrue for this opportunity? And does it accrue to startup companies or does it accrue to existing players in the market? Like that is something that I think is always an element of how we should be evaluating any investment opportunity. And so agentic commerce, I think like one of my problems with it is that like people say it and they're just talking about like autonomous transactions that are facilitated and executed by an agent. I think the universe of agentic commerce is like much bigger than that. I think like to me, it's actually about agents shopping with people rather than for people.
Yeah.
But so on the consumer side, I think my problem with it is that like the universe of transactions that I think consumers will let agents purchase for them without their approval or involvement is like small. Like I think if the purchase is above a certain threshold, like it's multiple thousands of dollars, no one's going to say like, go buy this for me. And if you have items that you're buying at like a set frequency or cadence, like for me, like, yeah, right. Groceries or like your like electrolyte supplements or your like creatine supplement if you're, like doing
Would love that.
yeah, right. But so you're on subscribe and save. And like that works. Like that's fine. Like I don't ever have to think about buying the things that I use every single day. And so I think like that's my problem on the consumer side of things. I think where it gets much more interesting is like shopping with me. And it's like as I'm looking for a couch for my apartment or I'm looking into new types of supplements that I can take, like I want an agent with me as I'm doing it to help with discovery, to help with price comparison, to help with all these other types of things. Like that's really valuable, but that I don't think is what most people are talking about. They're just talking about an agent being able to buy something for you. And like the one great use case that I do have for that is if you've identified something that you want to buy and you set up some sort of like trigger that says, hey, if the price ever falls below this defined threshold, go and purchase it for me. And that's cool. And like that I buy. But I think I'm skeptical of like in the short to medium term, like are people really going to let agents buy stuff for them without them intervening? Like especially for bigger purchases. And I just think that's unlikely. I think it's really interesting for B2B. Like, I think if you're a business that generally buys the same inventory or goods or materials to ultimately like produce your product or to offer whatever service that you offer, there's a lot of really interesting opportunities. So like if you're a childcare center, right, and you onboard a new customer, like in theory, I can see a world where once that new customer is added to the CRM or whatever the customer database is, there are agents that could go auto purchase like an onboarding package.
All the
and they
stuff
could go
that they would
purchase
need.
diapers and toys and baby food and a chair, right? All these things that you would have to buy to be able to support that new customer. Or like if your inventory ever fell below like a defined threshold, like go and auto purchase. Or if there's seasonality in your business and there's a spike, like before that spike, like add in an extra buffer of like 20 to 30% so that I don't run out of anything. So I think like, and like that to me is much more interesting and exciting than it is on the consumer side. I think on the consumer side, it's much more about like having like something shopping with you that has access to all of the other similar products that can surface them for you, that can do price comparison.
Watch sales, compare pricing, give you info on other competing products.
Right.
Is no one doing that?
Well, so I again, like as a pre-seed or seed investor, like one of these things is like, I think a lot of the like agent to agent protocols will be defined by the existing payment companies and card networks. And so that means like, where is the opportunity for startups to play in the space? Like that is the thing that I'm not sure I have an answer to right now, which is why it's hard. And then again, like as a pre-seed and seed investor, over the last 12 to 18 months, I can't tell you like the number of like agentic commerce companies that we were pitched and the number of stablecoin companies. And so if I see like 20 companies pop up like in the same problem statement or market within a certain amount of time, it becomes really hard to get excited about one because it's like, how are you going to differentiate? So I think like there's huge opportunity. I'm not fully convinced that there's huge opportunity in consumer. I think there's huge opportunity in the B2B world. But the other thing is like, where does this value actually accrue in the ecosystem? And I think the same thing is true for stablecoins. Like, I think stablecoins are also enabling technology, not the product in and of themselves. Like, I don't think building a stablecoin company is a business model in and of itself. I think stablecoins are one way of moving money. And if you're a payments company, then you need to be able to move money via stablecoins, but you also need to be able to move money in lots of different ways. And if I'm a payments company, then my job is to like use contextual intelligence to determine which rail I should send money on in which scenario or which context. Sometimes it's going to be stablecoins. Sometimes it's going to be something else.
Here's the buffet of options. Pick whichever one works the best for you.
Right. Or I'm actually abstracting away the decision from you. It's like you're just telling me that you need money to go from someplace to someplace, and I'm the payments
and it figures
company,
it out.
and I have all of the rails, and I've built the infrastructure, and I can say, okay, based on what you're telling me to do, I'm going to send the money this way as opposed to that way. And then when you think about it too, like to me, I've felt validated because all these stablecoin companies are getting bought by larger payments companies and card networks, like Stripe with Bridge, obviously, but then Modern Treasury acquired Beam. MasterCard just acquired Zero Hash. That company, BVNK, is in talks to get acquired. And so I think like stablecoins are like one way of moving money, and they are already like a hugely like, I wouldn't, the right word is probably like there's been success already, right? Like billions of dollars have already moved via stablecoins. So like there's clearly something there. I think the question is just like, where will the value actually accrue? And what it seems to me is happening is it's accruing to like the giant payment companies, the giant card networks that can integrate this into like a broader offering of different types of payments infrastructure and rails. I think the only way that I would be wrong about that is if one of those companies ever created their own like closed loop network that was like stablecoin only. And then I think that would be like completely blown out of the water. But again, I don't think that's a startup company doing that.
Yeah. Love it. You said the goal of a pre-seed round is straightforward. Build the first version, land the first customers, and validate the problem. What do founders consistently misunderstand about pre-seed, and what does an actually effective pre-seed raise look like in 2026?
Yeah, it's a great question. I think, first of all, just like the names of the funding round, like who cares, right? Like, it doesn't really matter, but like basically you're talking about like the first amount of funding that goes into a company. And so I think like what I look for, at least, or like the lens or the framework that I use in my own mind, is like at the pre-seed round, what I'm looking for is a founding team that has identified a real problem. They have a hypothesis about how to solve it, and they have some sort of unique insight into why that way of solving it is the right way to solve it. So that means basically you've just identified the problem that you want to work on, and you have some sort of insight or theory as to why the way that you're going to solve that problem is going to work better or at all. So I think like the two big questions that you always need to answer when you're raising a pre-seed funding round is one, like, why are we the right team for this? We were just talking about agentic commerce and stablecoins, right? Like all of a sudden there's 20 companies that are startups that are building in this space. So it's like, if you've identified a real problem, you're not going to be the only one that identifies it. Other people are going to recognize that it's an opportunity and try to play in that space. And so you need to be able to have a good answer of like, why are we the right team to build this company? That could be because of the existing relationships that you have. That could be because you built a tool internally that now you realize you need to spin out. It could be because you were a buyer of this product and everything that you tried out didn't work. And so you're like, I'm going to fill this gap. You could have personally felt the problem in your own life. And you're like, you know what, like I'm going to solve this because this is ridiculous. But you need to have some sort of like unique insight into why you're the right team to do it. And the second component of it is like, why is now the right time? Like for me, like financial services and fintech is very cyclical. Like there's waves of people that try to solve certain problems. And in most parts of fintech, I think like there have been waves and there are graveyards.
2022, not so much. And then, yeah, it's
right. But like there are tons of people who tried it before. And so I think one of the things that you need to be able to answer is like, why is now the right time, or at least a better time, or a highly compelling time to do this? So I think like raising a pre-seed round, like those are the two biggest things that you need to be able to answer.
Mm-hmm. So it sounds like 2026 is an incredible time to be doing early stage fintech.
I would say that there's never been a better time to be building in fintech. I think like all of these financial products are being rebuilt from the ground up because of the fact that you can apply artificial intelligence to so many of these workflows. I think you're seeing people completely recreate law firms and investment banks and wealth managers. Like everything's being redefined from the ground up. But I think like that's the early and obvious stuff. I think what I'm really excited for is like once you've rebuilt everything in a much more efficient way, then you get to the point where things get completely reinvented. And then all of a sudden there's new products that you could have like never imagined. Like that to me is usually what happens with any type of infrastructure innovation. It's like, okay, we're going to redo everything because of the fact that like now we can do it way cheaper, way better,
way faster.
But once we do that, then we have to think about like, what are the actually net new things that we can do?
Expanding a little bit on that, as teams build faster and earlier traction becomes easier to generate, how should founders think about the real dividing line between pre-seed and seed today? What's the bar you look at for each of those stages?
Yeah. So that statement on pre-seed earlier, right? It's like founding team, unique insight into a real problem. And they have some sort of thesis on the right way to solve it. I think what I expect to be different at the seed is you have some proof points as to why your hypothesis on how to solve it were correct. I think that's the biggest thing. And like proof can come in a lot of different ways. It can come through design partners, LOIs, live customers, product usage. It can come from all sorts of things. But I think to me, that's the big dividing line. It's like pre-seed is I identified the problem and I have an idea for how I want to solve it. And then seed is, okay, this was my idea. I started executing against it and like, look, I'm right. Like people are using it, people are adopting it, people are saying that this drives a ton of value for them. Or they can say, I was wrong, but the customer actually showed me in the right direction and now I'm right. And like, here's what I can show you that proves that I'm right. So I think like you need proof points at seed. But I don't think the proof needs to be like X amount of revenue. It just needs to be something that like validates that your hypothesis is right.
Yeah. What we thought is not true. We're going in a different direction. We've now doubled down on this.
Right.
We learned a lot.
Yeah.
Yeah.
Exactly. And then the other thing that you're going to be evaluated against at the seed round, which is not true at pre-seed, is how much have you gotten done in how much time with how much capital? Like that is something that you will be evaluated against. It's like if it's 18 months later and like you've built the first version of the product, like I don't know if that's as compelling as someone who like in 6 months built the first version of the product, got customers live using it, like got the feedback, improved the product, now have it in a place where everyone loves it. Like you will be evaluated on like, what did you do with the time and money that you've had at your disposal so far?
As things are going much faster, is 6 months, like where would you get excited about?
Yeah, like, I find that this is the answer to so many VC questions. Like it depends. It depends on like what you're building. Like it depends, like, are you building a consumer product? Are you building a B2B product? Like obviously timelines for those two different things are so vastly different. Like if you're building a product for banks, then like 6 months, like it's going to be 18.
Yeah,
right, exactly. Like no chance. So I think it depends. And I think like you as an investor have to be able to apply the contextual understanding you have of that industry to say, is this fast or not? Like if I know that like a startup company like has banks using the first version of their product, like I don't care how long it took them to do it. Like that's really impressive. Like if you have big banks using V1 and V2 of your products, like, okay, I'm not going to knock you for the fact that it took 6 to 12 months to get through their like vendor and procurement process. I'm going to be impressed by the fact that you got a bank using the product.
Great segue. You backed Codge at the pre-seed and stayed involved at the seed. From your perspective, what stood out about how they approached the earliest stage of building, and what might other founders take away from that?
Yeah, so Codge, I guess just for the context, like Codge is trying to solve the problem around the lack of access to capital for like small and medium-sized businesses. And so when they pitched us originally, it's a problem statement that is like very well understood and people have been trying to solve that problem for like 20 to 30 years, right? And I think the way that they positioned it to us, which made a ton of sense, was small business lending is broken because of the fact that like lenders are using the same underwriting criterion process for big loans and small loans. So they're underwriting a $500,000 loan the same way that they're underwriting like a $20,000 loan. And that doesn't make any sense, right?
Yeah.
Like it doesn't make any sense. And like, they're not making money on those loans, which is why they're not doing it. Like there's no other, anytime you're talking about financial services or banks, like banks are smart. Like banks know how to allocate capital and make money off of money. And so the reason that they're not doing it isn't for anything else than they don't think that they can make money doing it. And so for Codge, the idea always was like, well, how can we make it easier, faster, and cheaper to underwrite smaller loans? And I think one of the interesting things that's like worth noting here is that like we didn't invest in them the first time they pitched us, like, wow. Which is hopefully a good lesson for a lot of people. Like the first no isn't like a full-time no. Like the first thing that they pitched us on was different from what it was today. And we were like, we don't really think that that's the right way to solve this problem. We do think that this is a problem. And I will say, like, we did think that they had a great blend of expertise to build the business, right? Like the CTO was building in AI and machine learning like 10 years ago. So before this whole boom even happened, he was working on self-driving cars. So like understands how the technology works incredibly well. And his co-founder, she was working in credit risk at Vero and American Express. So you blend like AI machine learning with credit risk, and it's like a perfect fit to build this business. But the first time they pitched us, we didn't invest, and we stayed in touch with them. And we were like, what's the latest? How are things going? They would send us updates. And then they told us about like the second product direction that they ended up taking. And we were like, this is a lot more interesting. Like, we'll actually invest now. But I think it's a great lesson. Like, the first no doesn't mean it's always no.
Yeah. And send those updates.
Yeah.
Because it could work out.
Right. Yeah. I mean, we probably should have just invested them like at the first. Like, if you're a pre-seed and seed investor, like you should be investing in the great team no matter what. So like maybe we should have just given them money at that point. But like, I do think that it's a great, like there's a great lesson in that. Like, don't be overly dogmatic about what you're building. Like, you're not going to beat the market. Like, I don't care how strong of a willpower you have. I don't care what your endurance is like you won't win when you go up against the market. And so you have to be responsive to the feedback that the market gives you. And if it tells you that like this product is not the right product, then like you shouldn't hold on to it like dearly as if it's something personal or an affront to you. It's like, no, okay, this isn't the right way to do it. Like, what else could we try?
I mean, doubling down on that, you've read hundreds of investor updates. What separates a genuinely useful update from a forgettable one? And what non-obvious things should early founders include or avoid if they want investors to actually engage?
Yeah. So like you said, right? Like if you're a pre-seed and seed investor, you read through, and I'm doing this right now because it's early December, right? We're like flowing in, we're seeing all these investor updates. I think there's two things. So the first is, if these investors are reading hundreds of investor updates, it's your job to make it like crystal clear on what your asks are. So like, what are the things that you are explicitly asking for help on, or customers you're trying to get introduced to, and make it as easy as possible for the investors to be able to do something with it. So like maybe that's sending them personalized like LinkedIn lists where you can show them all the connections that they have at a potential customer. It's sending them an email that they can forward really easily to say like, hey, what do you think? But like making it as easy as possible for people to help with the things that you're asking for help on. And then the second thing is like, just be honest. Like, don't like, no investor believes it's all sunshine and rainbows. Like, anyone who's witnessed a company go from like 0 to IPO, which is not even something that I've done, right? So like, I'm talking out of my ass a little bit, but like, you know that like it's a roller coaster. Like every day, like something goes horribly wrong, and then the next day you're like, oh my God, this is going to be a public company, and like this is going so well. And then the next day you're like, oh my God, how am I going to solve this? Like, there's always
classic
problems.
Roller coaster, like photograph of a startup.
Exactly.
Yeah.
And so, like, as corny as it is, like your investors are on your team. Like, I think most startups can raise, like, capital is like a little bit of a commodity now, and that there's so much venture capital available. And so you should be choosing the people that you think are actually going to help. And so if you're choosing them to help, then like let them help and make it really easy for them to help, and be honest and transparent about when things aren't going well. Like, I would much rather have someone say like, yeah, this month like was really hard. Like there were these like 3 things that happened with customers, and like, it really like, it was such a pain to deal with. And then the conversation was like, well, how do we avoid that moving forward? Like, what were the lessons that you can actually extract from that? But like, don't say like, everything's going so well, everything's awesome, everything's perfect. Cause like, obviously it's not.
Yeah. You want to help.
Yeah.
So ask
right,
for help.
Right. That's, yeah. I mean, that is like, our success is
for.
directly tied to yours. Right.
Yeah.
So like, make it easy for us.
Yeah. Love that. Yeah. We're on the same team.
Yeah.
What's one thing you wish more fintech founders understood about building in this market, whether it's around distribution, timing, partnerships, or where real opportunity actually sits?
Yeah. I think one of the most important things to know about building in financial services is that like a lot of the generic startup advice I think doesn't apply. And I think it takes a lot longer. Like, I think that's just something that you need to know going into it. That like, if you're going to build in a highly regulated space and you need to be able to cross like pretty high hurdles in terms of safety and trust, then like it's going to take a while. And like, I think since we're fintech like investors, we understand that. And we know that like, you probably shouldn't be applying like the same expectations around like time to revenue or time to X in revenue or Y in revenue or all those types of things. Like, I think fintech companies take longer to build. The products take longer to build, but the good thing is that when the businesses compound like at scale, it's amazing to see what it's like. I mean, like even watching like what Robinhood and Ramp are doing, right? Like it's crazy to see what you can accomplish once you've hit that scale building in this industry. But I do think that like you need to know that it takes a lot longer. It's a lot harder, and like there's a higher bar in terms of like handling money or something financial for people. Like that's the nature of the beast. Like, and you have to know that going.
Bigger moats to the businesses too, once you actually get it off the ground.
Right, exactly.
Yeah.
But like move fast, break things. Like don't break stuff. Actually, like you can reinvent things, but like
Break small stuff.
but break, yeah, I don't know. And like the other lesson is like regulatory arbitrage is not a business model. Like eventually that will catch up to you, and eventually it'll get shut off. So like you can't build meaningful advantages doing things like that.
Yep, you have to be really smart about that.
Yeah.
Now to the espresso round. What's one view you hold about the market that most investors would disagree with?
Financial services need people.
Could you expand a little bit more on that?
Yeah, so I think a lot of people think with the advent of AI that like people will be removed from financial services. And I actually think that like you can optimize and automate parts of money, but there are a lot of financial transactions where there's always going to be a person involved. Like money is emotional, it's psychological. You want to feel like you're doing the right thing. And right now, the way that you feel like you're doing the right thing is someone who knows a lot about it tells you that you're doing the right thing. So I think like we're never going to automate away all of financial services. It's never going to be like fully agentic in terms of how all your finances get handled and buying a house. Like there's going to be a person involved.
I mean, we believe in that 100%. It's like when you're dealing with banking, it's historically a services business.
Yep.
And when you're dealing with people and money, you want to talk to a person.
Yep.
Like it's always serious when you're talking about money.
Yep.
What's one conviction you've completely rethought in the past year?
Outsiders can't win in FinTech.
Okay.
I think I had the point of view that you need to have operated within financial services to have an appreciation for some of those things we talked about earlier, right? Like how hard it is, how much of a slog it is, like the barriers and hurdles that you need to cross. But I think I've gotten enough data points now to know that like you don't have to be an insider, and like sometimes it takes an outsider to actually not break, but like reinvent something or like apply a new and different perspective to something that people who have been in it for 20 years have been trying to tinker on.
Mm-hmm. Love that. What's the risk most adventurers sleepwalking past right now?
I think one thing that I don't know and that could be really bad is the revenue quality of AI companies.
Ooh.
Like I think there's a possibility that there's a lot of like reselling of other companies happening that's being treated like high margin SaaS revenue, and then they're getting those types of revenue multiples applied to that, and I don't know if that's right. like I don't know if there's like downright, I mean honestly there probably is, because there probably always is, like there probably is some like fraudulent reporting, but I think like there are definitely people who are reporting things as recurring that are not recurring. Like I think there are people who are treating some types of revenue incorrectly.
As an investor, is that easy to spot when you're looking at some of these companies who are trying to raise money?
I mean, luckily it's not really my problem as a pre-seed investor. Like I'm not digging that deeply into revenue, but I do think like you could identify it if you spend the time on it. But I also think that like a lot of these rounds get done so quickly that like a lot of the time the process gets accelerated and you don't end up doing all the work.
Yeah. Who's the company, founder, or sector you're fascinated by at the moment, and why?
I would love to invest in a company in compliance. I just think that like it's such an obvious application of AI. Like you're talking about like mounds and mounds and pages of all of
KYC,
these like
AML.
Yeah, like it's so, and like maybe I think that's been my problem with it, is like it's too obvious, and I've been pitched like so many of them where everyone's like, and the problem again at pre-seed and seed is like if I get pitched 20 companies within a span of 6 months, it's like, how do I choose? Unless there is like one team that is like so clearly like so clearly different. But the problem is you see a ton of great people that all have like good and relevant backgrounds building in the space, and you're like, how do I pick? So I haven't picked yet, but I do feel like it makes so much sense, and so I would love to be able to do that.
Love it.
Yeah,
love it. It's great. Well, that's it. Thanks for coming on, man.
Yeah, thanks for having me.
Yeah.